Hi, welcome to Corby Mortgage's first Facebook Live Realtor presentation. Thank you for joining me. And we're going to wait a couple minutes for some people to hop on. And in the interim, I'm going to just kind of introduce Corby Mortgage and talk a little bit about some recent changes with our company while some more people join on. Most of you probably know who I am, but again, Jeff Schneller with Corby Mortgage, and I've been here for 20 years now. And I've served as CEO, sales manager, loan officer, and everything in between. My primary function is writing loans, so I am a loan officer most of the time. Bob Corby is the president of Corby Mortgage, and he has been in business for 21 years. So I've been here 20. He's been here for 21, and we really pride ourselves on hiring great salespeople, support staff that are really looking to stay long term. And it's pretty evident with another guy that we have working with us, Ryan Sweeney, who's our vice president, who does sales as well, and he's been with us for 15 years. And he's been a great addition early on and services Milwaukee and Illinois. Claudia Rodriguez, for anyone that has done business with us in the past, most of you are familiar with her or will be familiar with her. She is our head processor, and she has been with us right about 14 years as well. And she's got about 20 years of experience in the mortgage industry, and just as a professional. She's wonderful, and we really couldn't get everything done without her. So she's great. The newest addition to our staff is not new to the mortgage industry, but Susan Castronovo is my new team lead, and we are so excited to have her with Corby Mortgage, and she'll be supporting sales for me, and also doing some underwriting. She is actually a professional underwriter, so it adds a whole level of knowledge that we really didn't have. So being able to look at tax returns and really diving in and reading some of these underwriting guidelines can be a little bit tricky, and Susan's going to really be a huge help with that. So we are so excited to have her with us. So Corby Mortgage is a small company, and like I said, we've been around for 21 years, and we really take a hands-on approach to the mortgage industry. I like to do my applications on the phone. I like to talk to my clients, and I like to engage. It's a different approach than just filling something out online. You can't learn about the person, what their needs are, and you can miss things online. Anybody can get a pre-approval letter by filling out 7 things and pulling your credit, but you really can't get prepared to buy a home online. It's not possible for the majority of people. So at Corby Mortgage, we still kind of stick to those philosophies and the ways that we did things in the past, and that is, with a phone call and talking to clients and really getting that together. So I'm just gonna check and see if we've got some people watching here. Oh yeah, thanks Vicky. The beard, yes, I cannot get a haircut, and so I've decided to let my facial hair grow a little bit. So that is also new to Corby Mortgage. That will go away when this Corona goes away, if it ever does. Adrian, what do you think?
Yeah, let's start.
We're gonna start? All right, great. Well, again, thank you for taking the time out of your busy day to join this call, and thank you to all the agents who are on the front line selling real estate every day. Us mortgage professionals, we're stuck in the office, and we're not on the front lines, and we really do appreciate everything that you're doing for us. And again, my name is Jeff Schneller. I am partner and CEO of Corby Mortgage. I've been serving the needs of real estate community for 20 years. Over the years, I have seen highs, I've seen lows, and major changes in compliance, technology, and product. Our latest challenge, COVID-19, is like nothing we have ever seen in this industry, and how we adapt to the changes will determine our success or failure. On a base level, the changes are pretty easy to identify. There's no open houses anymore. There's no broker opens. We've got virtual tours. We've got virtual closings. We've got tightening lending guidelines. We have people holding. We have people losing their jobs 2 weeks before they sell their house. So there's things that we can all identify, and we all know what those challenges are. But if you look a little deeper, you can see now more than ever that your success as a real estate agent relies less on your ability as a salesperson and more on the team that you've associated with. Let's face it, the real estate community is very unique. A successful transaction relies on so many parties coming together. You've got a buyer, a seller, 2 attorneys, 2 realtors, 1 title company, 1 home inspector, 1 insurance agent, 1 loan officer. That's 10 parties that all need to come together, and that's just on a non-contingent deal. Add a contingency and the number doubles. I believe the successful real estate agents will partner with the best in order to provide the best service, the best experience, and the best guidance for their clients. One thing is still true: happy clients refer more business, and despite these changes and challenges, people still need to buy and sell real estate. Today I'm going to touch on a number of mortgage-related topics in an effort to help educate you on some of the changes and challenges, and also some opportunities which exist in the market today. I also will be open to some questions that you have at the end of this discussion. So I'm going to get started with a few hot topics, and first one is going to be with jumbo loans. I've gotten a number of phone calls from real estate agents saying, "Is the jumbo market really dead? Is it dead? Is there anything out there?" It's slim. So for everybody's sake, a jumbo loan in our market, Chicago, is a loan greater than $510,400. 10 years ago, these loans required 20% down and a high credit score. Over the years, competition is lowered down payments, relaxed credit score guidelines, and even led to alternative income documentation. Because most of these are bank portfolio loans or backed by hedge funds, the risk was higher. Once the market started collapsing in March, major players literally turned off the switch. There are a few banks offering jumbo loans, and I'm proud to say that Corby Mortgage still has some jumbo loan options. Being a mortgage broker and not being tied to one particular lender resource has given us a great advantage. So if you know anyone that's in the jumbo market and they've mentioned that they don't have jumbo lenders anymore, we can be a resource. We're still looking for high credit scores, but we still can get some jumbo loans done. Okay. As some of you are aware, the non-QM market all but disappeared 2 months ago at the same time the jumbo market dried up because basically the same reason. They're all backed by hedge funds. And for you that don't know what a non-QM loan is, it's basically, it's called a non-quality mortgage, and it just means that it falls outside the guidelines of Freddie Mac and Fannie Mae, where you show 2 years income, assets, credit score, and everything else. So there's alternative ways to qualify, which makes it non-QM. These loans are becoming very popular for self-employed borrowers seeking alternative income verification, or investors looking to purchase maybe under an LLC and not providing income to qualify, but actually just using the rent to qualify. Last week we did see one of the big players in the industry introduce 1 or 2 products back to the market, which I think is a good sign. But for right now, I think it's important for you guys as agents to understand that market is very, very dry. And if you get pre-approvals that are dated back in March and even early April, that it would be a good idea to double check with the lender and make sure that the program that they qualified for in March is still available today in May. Okay. Another segment of the market that I think requires some conversation is with self-employed borrowers. They face enough challenges these days just being self-employed. And for those that are lucky enough to be able to qualify for conventional loans, it's important that these borrowers have an understanding of the upfront documentation that's going to be required. Traditionally, banks would require 2 years tax returns, and now they're adding to that. So if you're even a real estate agent, we're going to use your 2018 and your 2019 tax returns. Then you're going to do a P&L and a balance sheet for this year. And in most cases, many self-employed businesses are going to have to provide a bank statement to show that they're actually getting deposits and they're actually operational right now. So that's kind of a big thing. And so if you're working with any self-employed borrowers, it's important that they get requalified if they haven't been requalified in, again, the last 30 or 60 days. So, and they understand exactly what they're up against. I think another thing that self-employed borrowers are going to have is heavier reserves. So that's just something. So we, if whoever was here in the beginning of the call, I did introduce Susan Castronova, our team lead, my team lead. And she, again, is an underwriter, and she's very well versed with self-employed borrowers and is going to be a huge help for anyone out there. So if you guys know, if you're working with any self-employed borrowers and you don't feel that their lender is good, send them our way. Some good news, Fannie Mae and Freddie Mac, they made a few changes, but they're still offering their 3% down program for first-time home buyers. And outside of a few reserve requirements and small changes, it's business as usual. However, many banks have applied their own overlays. And for you that don't understand what an overlay is it basically is Freddie Mac and Fannie Mae establish a set of guidelines that say you need to have a 620 credit score and put down 5%. Well, a bank can come in and say, well, that's great, that's the minimum, but we want to have a 660. So that would be considered an overlay. So there's a lot of banks, and I'm not going to name any names, in an effort to mitigate risk, have been creating their own overlays. There's a couple of banks out there that I've heard of that are requiring 700 plus credit scores and 20% down, or they're not going to lend. That's just how they're going to mitigate their risk. As a mortgage broker, I'm aware of who's lending and who's not. And I will tell you, there's a number of banks and a number of wholesalers eager for your business and do not have overlays. So when you're trying to figure out how to best serve your client looking to buy, and they're with a bank, the bank may tell them, hey, we can't do this because you have an FHA loan with a 625 credit score, but then Jeff Schneller over here at Corby Mortgage, we can get that done. And speaking of FHA, a lot of banks have actually increased the minimums for government loans, both FHA and VA. And I've seen banks, some requiring, like I said, 700, some are at 660. And with the partnerships that we have, we're still following most of the traditional guidelines, and I'm able to provide financing for lower credit score borrowers. I have a loan in process right now with a mid score of 621 and approve eligible, and everything's going just fine. So I also think it is worth mentioning for those agents that are working with investors or just working with people that own multiple properties, that there are a number of guideline changes when borrowers need to use rental income to qualify for the loan. I think the biggest change is the amount of reserves that the borrower needs in order to use that rental income to qualify. I'm finding most banks are requiring a minimum of 6 months reserves for each property owned. So what does that mean? So your investor that has 5 properties and the mortgage on each one of those properties with taxes and insurance is $2,000, that means that their mortgage is total up to 10 grand. And they of course have rental income to help offset that. So as they're looking for a new property to buy, they don't have to count those, all those mortgages against them. If that borrower doesn't have 6 months reserves, which would be in this situation $10,000 and mortgage payment would be $60,000. If they don't have that, they can't use that rental income. That's the problem. And so one of the other things that is kind of a hot topic, and I think the jury's still out on how this is going to work, is when it comes to forbearance. I've got a lot of calls over the last couple of days from people who are saying, hey, I'm just going to take the cash flow. My renter's renting, but I'm going to take the cash flow and I'm going to put my rental property into forbearance. And I believe that you have that right. However, if you're going to be looking to purchase property, you might want to think twice about how that potentially could affect you. Will the bank that you've got forbearance with, will they mark you a late? Will they ask you for that payment in full before you buy a property? So that's pretty important things to discuss, especially for your active investors, is to not just rush to go into forbearance. I can provide some guidance on that, but really the guidance needs to come from your servicer as to what their forbearance policies are, and then I will be able to tell you if you're looking for a new purchase or to refinance those properties, what the guidelines are if you happen to know somebody that's in forbearance. Another thing I wanted to talk about is PMI and down payment percentages. It's been a hot topic for years, and I've always maintained you don't have to put down 20% to buy a house. I know our moms and dads told us that. You have to do it to avoid PMI. And I think that advice was valid at the time it was given. And when there was one PMI company or two providing private mortgage insurance, they could do whatever they wanted. Their premiums could be anything. And you would find people putting down 5% on a home, 0% on a home, paying $300-$400 a month for PMI. Well, that's enough for the story to pass through the country that PMI is bad. It's not. Now, PMI is very competitive, and it's credit score driven, and it's based on also the number of borrowers you have on the loan. And because of the competition and because of the quality of loans today, PMI is very reasonable. And I think young couples, or really anybody that's looking to buy a home, needs to consider PMI in keeping liquid reserves. We're finding out now why. Because people need to be able to afford their mortgage for more than just one payment. People need to have a nest egg. So if you've got $50,000 to put on a home, and then that leaves you with 10 grand at the end of the day, I would say I'd like to see you put down 25,000 and leave you with strong reserves. You need to have money for a rainy day, and I think Americans are learning that more than ever today. So with the banks that I'm partnered with, we have a cool thing. They're signed up with pretty much all the PMI companies out there, and they shop that PMI to try to find that lowest rate humanly possible. And on a couple $100,000 loan, PMI can be under $100. It can be very expensive for a high credit score in the right situation. So I just kind of wanted to touch on that for those people still at home saying you got to put down 20%. I think I can make a very viable argument that that's not true for all people. Okay. And lastly, I'm really excited about. One of my investors has rolled out a really cool program for COVID-19 heroes. This program provides a lender fee waiver for anyone who qualifies. The lender fee with this particular investor is $945. So this is really substantial savings. And who's a hero? Well, obviously, what comes to mind would be your police, your fire, your doctors, your nurses, your teachers, your paramedics. And I would personally like to add my wife, who works from home and does e-learning for a 5 and a 7-year-old boy, but then unfortunately did not make the cut. This program includes a lot of other people, and it includes people, the heroes like grocery store workers. It includes sanitation workers, government employees, utility employees, cell phone employees, truck drivers, UPS delivery drivers, FedEx, USPS, and really so many more. So if you know of anyone that you consider a hero, let them know that we've got these discounts, and I'd love to apply it. And this isn't one of those like phony lender fee waivers where you just raise the interest rate. It really is, it's a straight 945 fee waiver. And so I'm really proud to be able to offer this discount to you. And also, please go ahead and share this information with your clients. In conclusion, the real estate industry is moving forward and banks are still lending money. The playing field is not equal, and the knowledge and experience of your lender is way more important than the loyalty you might have to your buddy, the loan officer, who you're currently referring your business to. Unless, of course, it's me. I honestly feel that Corby Mortgage is the best position to serve the needs of today's buyers because we have multiple lending resources. We don't just have one set of rules like some of the banks. We also have the experience, knowledge, and staff to handle whatever comes our way. 20 years ago, Bob Corby started this company to serve the needs of the real estate agents, and we have always maintained that we can help you sell more homes. I believe partnering with Corby Mortgage can do just that. Appreciate your time, and now I'm going to open up for questions if anybody has any. And this is really strange not being able to see you. Are there any questions?
Pull it up. I'm gonna get you.
Can you see my menu in the computer?
Mm-hmm.
So one of the questions that somebody just asked in general is it was related to mortgage rates. Where are mortgage rates and where are they going? And so I will tell you in general, you'll see advertisements on mortgage rates all over the place. But I would say in general, mortgage rates on a 30-year fixed are going to be anywhere between maybe 3 1/8 and 3 1/2. People are paying points these days and saying that this is going to be the last time I'm going to do this. So let's get ourselves with a really nice rate. 15-year rates are touching under 3. And again, interest rates today are going to be credit score driven, loan to value driven, lock date driven. And so it's not just a 700 plus credit score gets you that low rate. Every 20 points in credit score on a conventional loan will actually get either a higher and or lower rate. So it is very different. And whether you're purchasing or whether you're refinancing or whether you're pulling cash out of your home can have a major impact on your interest rates. So, I lost it, Adrian. Am I still seeing appraisals being affected? I've seen some cancellations in appraisals and some delays in appraisals, but for the most part, appraisals are getting done. There are some guidelines if you feel that you're sick. There are some workarounds for that. There are some drive-by appraisals. I've seen a lot of property inspection waivers too. So as a property has been either bought or sold in the last few years and maybe some data exists, Freddie Mac and Fannie Mae is putting out a lot of property inspection waivers. I just got one yesterday on a property where we just don't have to do an appraisal. They must have, maybe somebody, the current owner, refinanced a couple years ago and there's a good data available. And it's considered a market price. And so that's great. Being affected in terms of value, no, I have not seen any appraisals come in short due to COVID-19. Could you open that back up? So hopefully that answers your question.
Tracy has a question.
They keep going away. Facebook Live. Not sure if you deal with forbearance issues. Are you seeing cooperation from lenders with the CARES Act? So that's a good question with the forbearance. Being an originator, I'm not a servicer. And so although I know that there's been tons of forbearance calls, I'm not really on the front lines, and I'm probably not the best person to answer those forbearance, how it's being handled, and questions. So, but I do appreciate it. One of the things I'm being told to ask about is I'm hoping to do more of these educational type conferences until I'm able to like meet with people face to face, and really I love nothing more than talking real estate and sitting down over lunch or a cup of coffee and really talking about these topics. But if there's things that you want to see in the future, I would love to hear from you and let me know what you'd like to talk about, and I can prepare certain items for you and have these things in the future. So appraisals. I'm just kind of scrolling through some of the questions that are kind of popping up. Sweet beard that keeps coming up. That's great. Emails. For those of you that I don't know or who may be new to Corby Mortgage and new to Facebook Live, I do appreciate if you sign up and send me your emails, and I'll be sure to include you on future segments that we've done, and also be able to send you some of the videos that we've made previously. I've never done the live, and once I rewatch this may be the last time we do it. But again, I think I just want to thank everybody for tuning in, and the message being, we're still lending, we're here, you guys are out, you're the front line of real estate. We appreciate what you're doing, and continued success for 2020, and I hope to be here to answer any questions you have now and in the future. Thank you.